I'm on money making rich. I'm on money making rich. I'm on Patron. What's up, people? It's your boy, Mr. Trader Dial, here on this lovely, what is it, Monday night or is it a Tuesday night? Really not sure. But hey, we're doing a special live session with Forex. I got a good guest of mine. It's a smart guy, smart, intelligent brother man. We're in a couple with these black groups that we're in, trading groups. What's it called? Black Stock Collective, I think. That's a good group, a bunch of good investors in there. So, before I bring my guest on, I'm going to give you a quick overview of the Forex market again. Pardon me. All right, so always remember Forex. What's up, Tiffany? All right, so when you do the Forex market, it's two pairs. It's one pair, two currency. Always remember that when you do Forex, you're buying one and selling the other, or you're selling one and buying the other. So always keep that in mind. So when you, like, for instance, when you trade in the euro dollar, you want to look for, all right, so if you think that the euro is going up, you want to buy the euro. So you're gonna buy that. So while you're buying the euro, you're also selling the dollar. If you think the dollar is gonna go up, you want to sell the euro, because selling the euro, you're gonna buy the dollar. Yeah, Floyd, it's always pairs. Always remember that currency pairs is never one on one. It's always two. And always remember, I say this all the time. I'm gonna use the euro dollar again, EUR/USD. One is the base currency, the other is the quote currency. So let's go to the exchange rate for the euro dollar. Oh, let me bring it up real quick. I got it refreshed. I don't know what happened to my um. All right, let me go to my screen real quick. Give me a minute, people. Technical difficulties. All right, so whoever's doing this is getting fired. Whoever's in the IT department. Too bad that's me. I am my IT. All right, so let me bring it back. Let me go to my screen share. Go to my application. My Chrome window. All right, so we're going to bring it up. You're going to see my screen again. Remember, euro dollar. That's the base currency. That's the quote currency. It means that this is quoted in that. So when you see the price of the euro dollar, that means that 1 euro is $1.17. Again, that's the base that's quoted in that. Remember, that's for every pair. The pound dollar, that means 1 pound is $1.30. That's the base. It's quoted in dollars. Well, for this example, that's the base. That's the pound quoted. And I'm not sure what the TRY. Like I say, I really don't deal with crosses and exotics. I always deal with US dollars. So remember that. All right, people. So on that note, I'm gonna give you a little quick heads up on Forex. I'm gonna bring my guest in, Marcus. Um, let me take him back out. I don't know where he went to. Let me see where he's at real quick. All right, here he come. I'm finna bring him in, people, right now. What's going on, Mark?
What's happening, brother? How are you?
All right.
Good.
So go ahead and give yourself an introduction. Introduce
Well,
yourself.
okay, what's happening, fella? My name is Marcus. I'm currently out of Detroit. I'm working to be a full-time trader. I do trade every day, but I'm still working for somebody. So technically, I'm not a full-time trader just yet. I do help mentor people on this Forex game. So I hope you learn a little bit on the way I get down in this Forex market.
All right. So what pairs do you like to trade? Like your specialty?
Currently I do the AU, I do the UJ, and I do the GJ, along with
Tell them.
US 30.
All right. So tell them what that means.
Okay, well, the AU is the Aussie versus the United States dollar. So AUD/USD. Now that's one pair that I trade. The other pair that I trade is the USD/JPY, which is the United States dollar against the Japanese yen. That one is
That's
there.
a great pair to trade, especially during this time frame now.
Correct. I do like this one because obviously it works on pretty much 24 hours a day when the market isn't closed. Because half of it's during our session, and the other half is during our the Asian session. So normally you can get anywhere from 40, 80 pips a day just off this one pair. So, right.
All right, so explain to them how do you grab your pips? Do you like
Well, I do a couple different things. I try to have more tools in my toolbox than I need per se. It does get confusing for some, but I do market structure along with price action. I do have a TDI at the bottom, which is it's the RSI and the MACD with the Bollinger Bands all kind of wrapped into one, which shows the momentum of the price against the momentum of the volume of a pair. Along with that, I may use some moving averages, and what the moving averages does, they act as extra support and resistance. So when I draw up my market structure line, it's just extra confirmation on getting into the trade. So for example, if I see my 50 moving average was an exponential moving average, it's 50 to close. If I use that moving average for that pair and I draw up my market structure and it's still acting at support as well as my line is acting at support, then most of the time I'm going to be going in for a buy because it's still acting at support.
all right, so listen, I'm gonna bring up the US dollar Japanese yen. I'm a screen share, and if you're able to see, I want you to trade from my chart, all right, from my screen.
Gotcha.
All right, so let me bring it up real quick. All right, so I have it on a 5-minute chart. What time frame do you prefer?
It doesn't matter because they all work the same. Normally, I start from the daily just to find out my overall trend for that pair. Then I'll drop down to the hourly just to see how that pair is moving within that trend. Then I drop down to the 15, to the 5, to the 1s. If
I'm
they
glad you
started,
brought that up.
started
Multiple
that
time
movement.
frame analysis. I tell people I tell all beginners, multiple
Yeah,
time frame analysis. When you
yeah,
trade Forex or any market that has a lot of liquidity, it's better to see it from multiple angles. Like as you just said, they, they are pretty much going to show the same thing, but it's always better to get a long-term bird's eye view of the
the bigger picture.
situation before you dive in.
Yeah, you
Yeah,
always want to know what the bigger picture is simply because it's like a road trip. You're not just going to jump on the road and start driving. I mean, you
yeah.
can have some fun sometime, but you're not going to just jump on the road and say, I'm about to drive to wherever I want to go, Chicago or Indiana, and you're just driving. You have to actually have a plan on which way you're trying to go or which way you have to go in order to be successful.
All right, my man. So I'm finna screen share right now. I'm gonna bring up the I got the dollar yen on the 5 minute. All
All
right,
right,
so all right.
just go to the
Can you
date.
see?
Just go to the. I don't see anything as of yet. I still see us. All right, Beck, can you make it bigger for me?
Let me see
I'm gonna check
here.
on. I'm just gonna pull up. I'm gonna pull up the TradingView dollar yen too. Which broker are you using on TradingView?
I use Prime XBT. I have Owanda, but I move my money to Prime XBT for the fact that they're able to like Bitcoin is the currency on this exchange. I always co-sign for this.
Okay,
You know, like,
I'm gonna rock
yeah.
with it. Yeah, I'm gonna look at it. So
All right.
what pair are you
Well,
looking at?
at the US dollar Japanese yen. If we can't see it on my screen, maybe we can screen share from your screen because you're going to be doing the actual trading. So,
It's up
are
to
you
you.
allowed to
If you want
screen
to,
share?
yeah,
Do you
I'm gonna
have the
check. I got my charts up. I mean, so I can always go through what I see. Whenever. I don't
think
know. Oh,
it
here we
would give
go.
you the option of screen share at the bottom. It's the fourth. It says mute, stop, cam, mic, and then screen share.
Yeah, I think I just took it. I think that's me.
Yeah. So you take it and run with it. So as you doing that, people. So as he was saying that the yen, the dollar is like a pretty much a 24-hour pair because right now it's early in the morning there and it goes all the way to morning in our time. All right, your screen's
You
up,
see my
Marcus.
screen?
Yeah. Let me add it on a All right, go ahead, my brother.
All right, cool. So I'm just gonna start it all over. Let me erase what I have here. Pull up another one. We're doing the UJ, US dollar versus Japanese yen. This is how my chart starts. I already kind of have everything set up. Find the right one. This here is my 50 moving average. You notice with the price, I can go back to the daily, the hourly, 4 hour, doesn't matter. Prices will always come back to your 50, my 50 moving average. So this is a strong indicator or strong moving average that I have on my chart, just to give me a direction of where the trade is at. All right. This is my TDI at the bottom here. This is where I also use momentum. I look for M's and W's at the high and low of the day or the previous day, and I look for structure as well. We can talk about that. So when I open my chart, I start on my daily just to get an overall direction of which way the trend is going. So by the looks of it, it's in a downtrend. So I'll go ahead and draw me some lines here. See if I have a channel support. And we all know that it has to hit at least 3 places in order for it to be a valid up or downtrend or a valid angle or trend line, excuse me. So we have 1, 2, 3. I can bring this down there.
Facts mounting hard. Yeah, that is true. Same for you. Black crypto trading is very lucrative. Very lucrative.
Oh, yeah.
I'm looking at comments.
Oh, yeah. So now I'll go ahead and draw me another trend line. And a lot of people ask, how do you know where to put your trend line or your support resistance line on your channel? For me, I look at the closest succession of candles and I try to match up as many as I can in that closest, in this few, let's say 15 candles, just to see where we're at. A lot of times you might not get it, but if I have it, I'm going to try to make sure that find some in the middle and just make sure that it's a reliable structured area. So if you look here, this looks like a downtrend, looks like a little trend line or a channel. So we're just sitting here in the middle of this arena here. Also over this daily, I see a possible head and shoulders pattern. So it's telling me that you have a strong push to the downside. So I'm going to drop
because
down
as you see, it kind of touched the point of resistance, and it looked like it's gonna tap it again and come down. So yeah, I would be looking to go short too. You know,
right where my yellow line is at. This is roughly what they call the neckline. This is the area where the neckline will be. You have your left shoulder here. This is your head, and you're starting to have a development of your right shoulder. So it's a possibility, like you were saying, that the price is going to continue to go down. And if it does go down, we're going to be looking for this area here for what a resistance area, excuse me, a support area. And if we see support here, we're going to ride it on up. But I drop down to my 1 hour chart. We know that we're going on a downtrend. We know that we already hit some support here. So now I'm just looking. We know this area here is a strong zone for support, a strong zone for price action. So what I'm going to do is I'm just going to zoom in a little bit, and I'm going to start looking for market structure. I zoom in, I squeeze my chart down because it's not that dramatic of a range that it's going. So personally, right now, I see 2 things. I see this very tiny area here of consolidation within these last candles. This here is 1, 2, 3, 4, 5, 6. This is 7 hours of just non-movement consolidation. It's starting to break out here, but I don't trust them, so I'm just going to go ahead and put my line here. If you look to the past, I'll just put my crosshairs over. Look to the past, this is a strong area of support and resistance. Once what support turns into resistance. So since
and just to say something that he said, people, whenever a support or resistance get breached, it becomes the opposite. So when resistance get breached, it becomes support. When support gets breached, it becomes resistance. I'm going to it up.
Right here. Thank you, sir. But once I see that, then I'm just going to kind of wait and sit on my hands to see what the price is going to do. This is when I'll start dropping down to my 15-minute or my 1 hour. I know that we're in a zone right here. We're leveling off in this area. So you know what that is already. So we know where we're at now. So now we're waiting. We're just going to wait to see what happens with the candles. So let me drop down to the 15 minutes. Now I'm on my 15. I still see how it's trucking and driving and doing whatever it wants to do. This here is when you can start critiquing your initial analysis, because now if you look at it, my resistance should be a little bit up here. Look to the past, support was resistance. So now if you look to the past, and I draw my crosshairs, you see where the price has been playing with the entire time. So let me draw a line there so you can see. Right? So this box is simply a support resistance zone. It's basically someone drawing these horizontal lines individually, but it's just capturing everything in that one picture. That's simply all the box is. So you always still have to look for the past to see which way the price is going in the future. So since we know that this line here is a good area for a lot of action, or it turns into resistance, right? So now that it's resistance, now it's turning into support. We know that. We know that it's on top of this 50 moving average. So I'm just going to simply wait. I'm going to wait for it to possibly reject off of this line here, since this is a rejection line anyway, and come back down to this 50 moving average. Or, because I know that's in a downtrend, that's all that I'm going to wait for. Since it's in a downtrend, I'm not going to trade against the trend. I'm not that skilled yet. If it's a downtrend, to go an uptrend. If it's uptrend, I'm trading a downtrend. You want to say
No,
something,
that's what you're supposed to do. Even skilled traders do that. You never trade against the trend. That's how you get rolled out the market, especially something like Forex. Hey, can you explain to them how fast Forex moves? 'Cause like for the people who don't trade Forex, who only trade stocks, I don't think they can quite grasp how fast, like how volatile and how fast the pips can just come and go on Forex.
All right, well, let me tell you this. Not yesterday. I did a Zoom. I don't remember. It could have been last Sunday or Wednesday or something like that. I don't remember. Really long story short. I did a Zoom and we were going over the G. Yeah, this is it right here. Use all this message. So yeah, we're going over G. This is it. This is the same thing I just did. This box right here. Same thing I just did. This is what I went over whatever day the 20th. So it has to be Sunday. I don't remember. But this is the Zoom. This is my Zoom call right here. And I told them, this is what I always tell them. This is my structure. This is the way I get down. When the price breaks out of my zone, either at the top or the bottom, I don't, because it only can move three ways, up, down, or sideways, right? So once it breaks that zone, it has to retest in order for me to get into the trade. So yes, it did break, but it did not quite retest. It's all the way across. So once it broke, it never retested. It just kind of stayed in that zone of play. But if you look, once it broke down here, this support line, it retested these moving averages. But here, this candle with this wick was my retest. If you get in there, this drop from here, just on that one drop, on a 15-minute chart, that's 144 pips. So within one day, just probably, let's say 3 hours, maybe 4 hours, at a dollar lot size, at 100 some odd pips, would have gave you anywhere from $1,400 and up, depending on how much a lot size is for this type of pair.
I don't think they understand that when you trade Forex. Like Forex is literally, but the same thing as you can make it, you can lose it.
You can lose it as well. So
Forex.
Yeah, you have to be careful. You have to find. For me, the reason why I use more than one tool is because I've been studying for at least a year and a half. I went to different people, started on my own. I've been doing this for a year and a half, so I've been studying strategies, manipulating strategies to work for myself. So now I can see the market better. So now that I see the market, I can use this to do that, and then just break it down. I tell people all the time, 3 things that you need to learn, that you want to learn: market structure, price action, and mechanics. Those 3 things alone. You can read a book called Naked Forex. Those 3 things alone will help you understand and read the charts a little better.
And I actually have a book called Price Action Trading, where I say that like price action. That's the most important thing when you trade, especially Forex. Is follow the price, man. Just the price tells you everything. I'm glad you zoomed in. I'm sorry because it's like a lag. I keep telling you. I apologize.
So perform.
It's slow.
It's your zone, bro.
No, but you're my special guest. I wanted you to explain to them about the Japanese candlesticks. Zoom in on the
Okay.
candlesticks. So
Okay.
how
Let me
important
erase.
do you use your candlesticks?
Yeah, you have to use your candlesticks because one thing that we have to understand is that these candlesticks are made by institutions and banks. We don't make these candlesticks. This long candlestick here, you got to understand, this is $1 trillion market. So this candle right here by itself, this one candle, this entire range of the candle is 20 pips. That 20 pips in trillion, when it comes to respect of $1 trillion pie, $1 trillion pie is hundreds of millions of dollars.
Yeah, that's quite a billion. And you see the candle right, the one right behind it. I'm gonna continue while he gets up. I'm gonna continue
No,
that.
I'm sorry, bro.
One
Good,
right
good, good,
behind
good.
that.
No.
That's about this. That's like all together. That's about $2 billion. I would say those two candles. That to that.
Easy, easy.
Yeah, that's
And if you look at the third one, the range of it goes always around 50 pips. So that there alone, those
that.
50 can either these 50 pips can do two things. If you had a big enough account and you put say a $5 or $10 lot size, that right there is pretty much some people's monthly salary. And what is this, 15-minute chart within 45 minutes. And you can say, okay, how do you see that? How would you get into this trade? This is how I would get into the trade. It's easier to always see the trade afterwards. But this is what I have. So say if I just woke up and none of this happened. This big green candle hasn't happened yet. I'm in this little bunker of candles right here. Right? So what I would do is same thing for your box. Your candles are ranging at. Right? You don't even have to stretch it. A lot of times you could stretch it out just so you don't have to keep stretching it out once the trade started. So yes, you see the fake out here, but now look at these three candles here. These three candles here. Look at them, and then how these three stair stepper candles in your Japanese candlestick Bible. These three things here mean something. If I'm mistaken, it looks like a shooting star pattern, which is a sign of a reversal symbol, but I'm not exactly for sure on that. You have to look into that. I'm sorry, I don't know. I can find it. I can get you on the next one. Here is a reversal pattern. Just these three candles. So once I seen that they had a strong bullish candle to the upside, then they tried to push it again. So we all know what the wicks mean. Me personally, I've also come to realize these long wicks are exhaustions in the market. We all know that. But these wicks here mean that they're going to start going to the other side. Start seeing a
Side. They're just
succession.
touching it. It's like they're trying to reach up, but they
You're
can't.
trying
They
to reach.
can't grab.
Exactly. Exactly. So they give you the strong candle here. And also, there's some other books that's floating around. It's called the Market Maker's Book. So you're starting to think like the market maker because this here can only move it so long. They can only move the pair, or I'm sorry, the price, so many different ways, so many different pips in a day. It's called the average daily range. They can't go more than 100 pips or 50 pips in a day just because they don't want anybody to be cheating us. They already cheating, but you understand what I'm saying. So back on track. This here, with this candle, these bullish candles here, most people who are buyers, they would start buying because they see the strong positive upside to these candles. But if you look to the past, you see that we have an indecision candle here, a strong bearish candle. And then the bullish people, the bulls, had to come back into the market to readjust the price because they can't move the price from one side to the other just freely like that because then that'll be an insider trade. So they can't do it. So they have to play along with it, right? So as soon as you see these candles break out, a lot of people, as soon as they see this candle break out, a lot of people are going for the buy. We know that the GJ, the Great Britain Pound, Japanese Yen, is in a sale. So if it's in a sale, we're not going to fall for that trick. We're going to see this overexhausted candle here, and then followed by another strong bearish candle here, right? Now, by the third succession of candles is what? It's back in our zone. Those three candles have completely taken over. Just to show you, these three candles completely took over that one candle. So that one candle doesn't even exist anymore.
Listening more exactly. It's now back to being even. It's now back to the
Now
bar
back to
before that, which was that
now
red one.
back to being. You see, yeah. So even if you see the playing around here, and you want to move this up before, because now you see him playing wicks, you say, okay, let me just leave it there. You set it there, and you see it playing some more. the exhaustion with the candles on a downtrend. Look what it does. It breaks, comes back and retests your original line,
Pause
and then
out.
it drops. But also, I want you to notice one more thing. This is something else that I caught with these cats, right? So you have your overall structure here, right? You have your overall structure. If inside of this, your um, resistance and support area, there's always some hidden structure, always. So now, if you look here, where my crosshair lines are going, you see there's a lot of price action right here, right? You see all that price action going across? I can
Yeah.
draw a line there so we can see it more. So technically, that's, to me, in my opinion, that's a hidden market structure. If I go back some, I can drag this blue box and this line. We can follow all the way to the back and or further back. I guarantee you. Yes, here we go. See how we playing? It's just a
Yeah.
line. So to me, there's always levels to their market structure because obviously there's so many different players in this game. Everybody isn't trading the same way. You got people trading
Oh,
off your daily. You got people trading
and you
off
see at
your
the top, I'm sorry, can you zoom back out? Can you zoom back out
yes.
to how you had it with the
Mm,
zoom all the way? How you had the with the one at the top? Yeah. See, when you zoom in at the top though, it was a bunch of indecision candlesticks. I saw a few dojis and a couple pin bars. See, that's why I
yeah,
tell people when you read your Japanese candlesticks, you'll start spotting the incision. Like you really don't have to really go to in deep. You can just see right there. All right, so all the crosses or the dojis, like right there, that's a lot of indecision. Doji, pin
and if
bar.
you look, it's in a consolidation area too, so you know that they're fighting for control of
Facts.
the market, so to speak. So those two
Yeah,
things
so
alone,
yeah.
I'm sorry, bro. So those two things alone will keep you from just placing a trade because it's like
Yeah,
here,
and
oh,
and
this looks like a good buy, so you might go in for a
yeah,
buy. So, bro,
just roll it out. And the best thing about things like that, though, whenever it's in that tight consolidation zone, as we see, whenever it breaks out of that zone, it breaks. It doesn't matter what
it's hard.
direction. It's really, it doesn't matter direction, but just know when it comes out that zone, man, it's like an M, but just the bottom falls out because it's like they fought so long and they lost. They just all right, forget it. I'm exhausted now, and the price
See that?
goes. That's the thing with forex, man.
See that
That's
right
as
there?
we just said, that's a fortune.
Yeah, man. See that 50 right there? See how it
Yeah.
is acting as my support as well? Because now also one thing I want you guys to realize, nothing is ever going to be accurate 100%, not all the time. So this is my support line, yes, but just because it didn't hit too close, it's still close enough for me. You know what I mean? It doesn't have to hit exactly on the line all the time. It has to be in that area, and it has to be a strong confirmation. Then I go ahead and strike. So if you look, my 50 with my close to my support line, which was support, as we know, turns into resistance. So I'm in there. If you look at the
Yeah.
TDI, this here, this is my 50 on the momentum side. This is my 50 on the price side, same direction and everything. The green line is my RSI, which is the price movement. See how it's hitting its
Hold
head
on,
on there?
those are all them indicators mixed into one.
Yeah, man. Come on. Yes, sir.
Who do you
These
trade
are the
with?
Bollinger, these are the Bollinger bands right here. I got Hughes, right, man.
You got who?
I had to put those in. I trade with
Oh,
Hugo's way. I had to input those in myself. Yeah.
oh, okay. I was about to say, wow, I never seen how it mainly. Okay, so you had all right, that makes sense now. I was like,
Yeah,
wow,
yeah,
that
yeah.
mainly come with that. Like, gee whiz. I'm gonna
Now
have to
yeah, I
go
got
over
my
there.
Bollinger. Now, I'll send you the parameters or whatever, and we take it from there. Obviously, you can change these up back to the 70 and the 20 or 70, 30, whatever you decide to do. But I like it though, man. Especially with the US 30. If you look at a couple of things with the US 30 compared to with the TDI, it's bananas, man. But I'm
Oh,
sorry. Go
speaking of
ahead.
the US 30, you got the yen chart. The Dow and the yen, they had a correlation actually. For like
Oh yeah.
it was weird. Yeah, the Dow and yen had a correlation, which was crazy when the Dow went, the yen went. That was
Man,
nice. But
you
yeah,
know, they
my
was talking
friend.
about those tariffs too. So what's it?
Yeah, so as he was saying though, damn, you had said something that really I want to expand upon. I forgot. I forget. You had said something that it sparked in my head. But yeah, people, that's my
Intermarket
man.
structure.
No, I'm sorry.
Oh no, I was gonna say, was it the intermarket structure or whatever, something like that, or was it talking about the support and resistance line, my 50 moving average, the
Support, yeah, support. All right, yeah, exactly. What you just brought it back. So you see the words he just said: support and resistance, market structure, trend lines. That is all technical analysis. As I say all the time, technical analysis is what you should learn. All right, I'm sorry. I don't tell you what you need to learn, what you should learn, but it would behoove you to learn technical analysis. Steve, the academy, it's $50 a month. Oh, I mean, just email me because I don't like talking business while I'm doing live. Just email me though. But yeah, with the support and resistance, technical analysis, and all that. See, even though this is the forex market, what everything he did right there, you could use in the stock market. Every single thing that we talked about and just did on the screen is applicable in the crypto market, in the options market. As long as the market uses support and resistance, relies on Japanese candlestick, relies on highs and lows, you can use that. And that's one thing I'm gonna try to beat in everyone's head when you trade. It would behoove you to learn your technical analysis as price action. Don't worry so much about what's happening. You want to worry about why it's happening, what's making it happen. That's how you become a good trader. I mean, sure, the price shot up and you made profit. You know, that's the number one thing in the market. Don't never let that not. Don't never let me confuse you with that. Making money, the profit is number one thing. But instead of always saying, "Wow, that happened," you want to know why did that happen, and better yet, how can I see it happening next time so I can get in the head of the next move? And that's what these technical analysis, price action, and everything that we talk about is about. It's how you're able to spot that on a chart. And that's what chart Japanese candlesticks, I'm gonna say this so I'm blowing his face. Japanese candlesticks, support and resistance, moving averages, highs and lows, multiple time frame analysis. The thing with this is it's really not that hard. It's just time consuming because on a chart and on the brokerage chart and software does this for you. It's automatically done. You just got to write it down and write it on the paper and remember these points and put it back on the chart. Once you start doing that, like I tell people, you need time to be a trader, not necessarily your mental aptitude. So you got the patience to trade. That's what it's about. It's not really about being a sharpest knife in the box. Nah, man, this is really time consuming. That's what this is about. It takes time.
Can I jump in? Can I jump in for a
Yeah,
second,
sure. Go
man?
ahead. I was waiting for you to come back. Yeah, go
I'm
ahead.
so sorry.
About to freestyle it, baby.
I was just making my night. So what I want people to do is this. If
Yeah,
I don't
go
know how
ahead.
you get, I don't know how you get down, but take notes on your trades. So when you have your demo account and you place a trade, place or write down why you made that trade. So if it's Euro USD or whatever pair, I'm going to make this trade when this happens, and then place that trade. Or you place a trade, this is the reason why I made that trade. Also, patience is key. So a lot of people can do everything they want to do, or they have their own strategies, but the strategy has to be yours, right? So another thing, if you're working full time, try not to trade off the 5 minute or the 15 minute. You can trade off the hour and the 4 hour and still gain um, a lot of pips doing it that way because the structure is still going to be the same. The candles are still going to read the same. Moving average is still going to flow in a similar direction. Uh, so I know that any questions or anything while my man's doing his thing. You know, so, but also the Japanese Candlestick Bible. What I suggest is the Japanese Candlestick Bible. When you read that, that should be one of your first reads because you can't really see the charts unless you understand the candlesticks. When you know a certain candlestick pattern is there, such as a reversal pattern is forming, then you can start anticipating following that trend. Because there will be times where you look at your daily chart and it may be in a downtrend, but the hour chart or the 4 hour chart is in a quote unquote uptrend. It could just be in what they call a retracement or a pullback. So you just have to understand where you're at in the chart and then trade accordingly. Any
All
other
right, so
questions?
but yeah, man.
That's on you.
Oh.
I don't
All
know if
right,
you
Mark.
heard.
So yeah, we finna sign off, man. Hey, do you want to come on tomorrow? Cause I have uh another trader, so it's gonna be three of us talking about trading styles in the forex.
Yeah, I'm down. Yeah, call me, man. I'm down for whatever,
All right,
bro. I love
it'll be
talking
the
about this
same.
shit, man.
It'll be the same
What's up?
bad
Excuse
time, same bad place. All
me. Bet. I'm with.
right, my man. You have
All right, bro.
a good night. All right. All right, people. That was my man Marcus. As you see, we're gonna do this some more. Hold on, Steve. What's one thing that most beginners need to overcome? Patience or lack of patience when you don't see profits immediately. That's the most important thing, my friend. You want to do your due diligence. A lot of new traders. So I'm telling you from how I went when I first traded. I jumped right in the market, but I didn't even take time to figure out what I was doing. I just saw it was money to be made and wanted to make the money, and I ended up losing a lot of money. So it would behoove you to, just to be a patient. Take your time when you trade. Do your due diligence. Thank you, Clyde. We try to be informative. That's what we do at Trader Die. Yeah, people, you want to just do your patience, do your due diligence when you're trading. As I always say, we like to focus here on Trader Dot on technical analysis because it's used in any market. So again, if you tune into us, you're gonna constantly hear Japanese candlesticks, support resistance, multiple time frame analysis, things like that. Those are the things that you need to really be a successful technical trader, especially in the forex market because it has high liquidity and something like stocks. It's always good to notice in the stock market, but yeah, you did, good brother. But yeah, but yeah, but also, we're just gonna think about that tomorrow. Hopefully I get my other trader on here, my man Elmo, and bring Marcus back. See, Elmo is more of he's a true technical trader. He uses the what does he use? The scanner. He uses a certain scanner. So there's different ways to technical trade. So there's technical and fundamental, but there's different ways of those different ways. So hopefully, if we get Elmo in there, if we get Marcus, you guys can pick their brains. Me always got something to say. I'm gonna be the host, picking both of their brains and their different trading styles. Because there's more than one way to trade. I want people to understand. There's all long term, short term swings. As you see, there's like 70 currency pairs. So it is literally 24/5 in Forex. Things like Bitcoin's 24/7. It is literally around the world. It is 24/7. Forex is 24/5. So again, something like the yen dollar, that's the perfect currency pair because it bridges the gap between Europe and America. It starts now. It's 8 in the morning there, and by the time the euro starts, it's going to be ending. And then the euro dollar from 8 to 12. That is the best time of the world to trade. That is the world's two most profitable economies: the United States, obviously, and the euro dollar. I'm sorry, and the European euro from 8 to 12. So you got the stock market, the world's two largest stock markets, the Nasdaq and the Dow, are also. I'm sorry, then you got all the European exchanges. They're all going plus the currencies. Like that is a lot of money is being sent across the Atlantic Ocean, coming and going and coming. So it would behoove you guys, to learn more ways to trade. As I always say, diversification, diversify your portfolio. It's more than one ways to profit off this market. You don't have to just get money off of Bitcoin and stocks. You can get money off of options, get money off of Forex. And Forex is a whole nother world upon itself. $5.3 trillion a day, the world's largest market by far. As a matter of fact, you can fit all the other world's everything, stocks, bonds, crypto, everything in one, and it still wouldn't equal Forex in a day. So that should just tell you where the most money is to be made at. But on that same coin, on the opposite side, the most money to be lost also. So people, on that note, man, one of these days I gotta put my chart up here so I can show you how to All right, Steve, I'm gonna check it out after this. I gotta put my charts up because one good thing you want to do, yeah, Floyd, I can see him. One good thing, people, is that you want to have a chart where you got your highs and lows for the month, for the week, and for the day. Once you get those down, like in the pivot points, see, there's things like this that once you're doing for the month, you don't have to worry about it for the rest of the month. And the best thing about when you do it like that, whenever you see the price getting close to those points, naturally they're going to be resistance or support. But once they break through those points, then you know it's a lot of money to be made. So that's the best thing about charts. Once you keep your charts manually, as my man Marcus just showed you, he keep his charts manually, and his chart's already up. So when the price makes his move, you can jump right on the price. You don't have to lag behind it. So that's why it's always good. I tell you to do your due diligence. Keep your charts. You don't have to make a chart every single day. I mean, I do because I trade every day. But say if you only want to trade once a week, it's still good to have a chart to track the price. Because maybe you can't get on your computer. Maybe you out the internet. You can go to your chart and see the price. Because at the end of the day, people, the chart tells you everything you need to know. Honestly, it tells you the price is up. It's at an all-time high, the all-time low. The price tells you everything. The chart is all right there for you to see. That's why we say price action trading. That's why I wrote the book, Price Action Trading. That's the most important thing. The price. Don't worry about nothing else. So again, on that note, I'm gonna end on saying the same thing I'm gonna say from here to eternity. Japanese candlesticks, support and resistance, multiple time frame analysis, moving averages, and the RSI oscillator. An oscillator is something that rotates between 2 points. So, a fan, hey, that's a perfect example. You know how the fan goes, like, you put it here, and it spin all the way onto the left, and spin all the way back to the right. That is an oscillator. So, in terms of trading, the RSI, it rotates between 80 to 20. Those are the points. Whenever something is in the 80 territory, it is now overbought. When something is overbought, it's time to sell because too many people are buying. A reversal is coming. Once it oscillates from the 80 back down to the 20 range, is now oversold. Too many people are now selling this. It's time to buy. See, when you start combining those indicators with the candlesticks and then with the price action, the odds increase. As I always tell you people, if you blind trade, it's going to be a 50-50 chance because there's only two choices. So even if you close your eyes, you're going to be 50-50 chance. So when you start using these indicators mixed with the price action and start knowing how the price moves, you're going to raise your odds from 50 to 60 to 70. That's what it's all about. Because as we all know, there's nothing 100% in trading unless losses are inevitable. That is the only guarantee in investing. That is the only 1,000% guarantee. Losses are inevitable. You will lose money from here and there. That's just, you can't get around that when you trade. Everything else is percentages. And on that note, people, always remember, trade or die. That's what we do here. So tomorrow, hopefully, I get my man Marcus on here. I get I get a few guys on here. Like I said, you guys can pick both of their brains, see what the different traders talking about, and that's what it's all about. And on that note, man, on this Monday night, see you guys tomorrow. I had to change up the music. We gonna make it still in rotation, but we gotta switch things up here, Trader Dive. I'm on that money making mission. Yeah, people. So tomorrow, same bat time, same bat place, 8 o'clock, maybe 8:05. Explain the pip. All right, Floyd. Sure, I can explain the pip. I can explain the pip. All right, so a pip is the fourth spot of the decimal, as I showed you an example. So if you got, all right, so you remember in high school how they told us the 10th is the first spot, the 100th is the second spot, the 1,000th is the third spot. Well, the pip is the 10,000th. It's the fourth spot. So that's how the profit is measured in Forex. See, Forex moves so fast and so much that the pip had to get moved, that the profit point had to get moved so far over. Because if they just kept it normally, it So they had to move it all the way out there. So the pip. So that's how the profit is measured in Forex. You understand, Floyd? And I think pip stands for percentage in price. I don't know what it actually means, something PIP, but that's what the pip is. It's the 10,000 spot. It's the 4th spot over from the decimal point. Is that it? I got any more candy? Candy. It's a rough night, people. All right, people. On that note, man, like I say, see you tomorrow, man. Same bat time, same bat place. 8:05, 8 o'clock, 8:05. Really not sure. And yeah, man, bring your thinking caps. Yo, if anybody wants to live trade, what is? Just go to yeah, the 4th spot over. Yeah, like I always say, man, go to like a wind up, go to any Forex trade and open up a practice account, and you guys can practice trade. What is? Because that's how you're gonna learn to trade. You can trade with a practice account, use fake money and all. You can make all the mistakes you need to make. That's what I actually would want everyone to do. Hey Floyd, you right there, because you're now in the Trader Academy. So I'm gonna walk you through how to set up an account. When I know people, we're gonna get up out of here because I'm never gonna leave. So I keep getting distracted. You guys have a good night.